Hi, everybody. This is Jennifer Schaus, and we're coming to you live today from Washington, D.C. Thanks for joining us in our webinar series covering all parts of the FAR. And a little bit about the series. It does run on Wednesdays and Fridays at noon Eastern. All of our webinars are complimentary and recorded. You can find them on our YouTube channel, which is also complimentary, and the PowerPoints are posted over on slideshare.net. You can log into slideshare.net with your LinkedIn credentials, and again, that does not cost anything. We do have sponsor and advertising options available for you. If you want to sign up for the series over on our website under the tab called the FAR, they're all listed there in chronological order, which is how we are covering them as well. If you are anxious to get to a part that we have yet to cover, we actually covered the FAR in 2020, so 4 years ago. Just keep in mind that anything that we covered in 2020 might be a little bit out of date. So just again, keep that in mind. And there's actually a new part, FAR Part 40, that has more or less been added in April of this year. We're going to cover that on Tuesday, June 11th. That's on our website if you want to sign up for that. A little bit about us before we get started. We do provide services for government contractors. We are not a law firm. We're consultants, primarily helping companies get onto the GSA schedule. Some other services that we provide are listed here on the screen as well as on our website. We've got a newsletter that goes out now to over 30,000 government contractors. And we do have advertising options available in that. If you're interested in advertising, please drop us a line and ask for our media kit, and we'll provide some pricing information for you. We do currently have a buy one, get one advertising offer. Here's some of the stats. Again, as I mentioned, over 30,000 subscribers, most of which are government contractors. If you're looking to get on any of these contract vehicles, again, drop us a line and we can help with that. Anyone that is focused on any of the Capitol Hill hearings that are open to the public, these can be helpful, especially if you are selling your services to any of these departments or agencies, or following anything with cybersecurity that's happening today over at the over on the House and the Cannon building at 2 o'clock, and some others are listed here. I'm teaching some classes with our friends over at the Eastern Michigan Apex Accelerator. These are formerly PTACs, Procurement Technical Assistance Centers. These are complimentary, the class on GSA schedules, and then a more or less 101 federal marketing class. And more local is a couple classes that we've got on the schedule that kind of build out through November of this year with the Virginia Apex Accelerator. Again, also used to be the Virginia PTAC. They've all gone through rebranding. 2 classes on GSA schedules, and then a basic marketing class as well. Some of our sponsored content webinars that are coming up. We've got a 2-part series with Carrie Palmatier from Palmatier Law. She's covering SBIRs and STTRs. You can sign up for these on our website. Again, these are complimentary as well. And now we want to thank our webinar sponsors, which is more or less what allows our webinars to be listed and available to you at no cost. We want to thank our friends at GovEvents. That's the premier platform for posting events related to government and government contracting. You can find all of our webinars and our events on govevents.com, as well as our recordings from our past almost 700 webinars. We also want to thank Tom Johnson and his team at Set Aside Alert. That's the go-to publication for contracting opportunities for small, women-owned, veteran-owned, hub zone, and 8A firms. Visit setasidealert.com for more information. The Fairfax Economic Development Authority has an online calendar of events and webinars, and we want to thank them for posting our events and webinars on their calendar. The Virginia PTAC, or actually, as I mentioned, the Apex Accelerator at George Mason University in Fairfax, offers free one-on-one counseling to established government contracting firms in Virginia on federal, state, and local procurement topics. If you're interested in learning more, please use the links provided to explore their services, review homework recommendations, register for live training, and find useful links to agencies and other self-directed learning. One-on-one counseling is limited to eligible client companies. Appointment requests are handled in the order they were received, and based on counselor availability due to high demand. Online resources and group trainings are free with no restriction on your business location. Join the Greater Reston Chamber of Commerce monthly Government Contracting Council meeting to network with contracting peers, learn about upcoming events, opportunities, and also contribute to future programming. The meetings take place on the fourth Tuesday of each month at 8:30 a.m. at the Greater Reston Chamber of Commerce. The next meeting is Tuesday, May 8th. If you've got questions, please contact Alicia. And more importantly, tomorrow you'll find us there at the 12th Annual B2G Matchmaking Conference and Expo. This is over at the Sheraton Reston. I think you can still register, but I'm not positive. You might want to click on the link there that says nova.restonchamber.org to learn more, but they've got a great agenda. They've got some great speakers and topics, as well as exhibitors. And again, we'll be there, so please stop by our booth to say hi if you're also going to be in attendance. BidSpeed, do you want help winning government contracts? BidSpeed can help. Users can find bidding opportunities from federal, state, and local government. Additionally, you can search for teaming partners, incumbent point of contact, expiring contracts, compliance matrix, and other proposal templates. Create your login today at bidspeed.com. BidSpeed is an official partner of the U.S. SBA's 7J Management and Technical Assistance Program, which has recently been renamed to, I think, I forget the acronym, but we'll have it ready for next week. The FBC, events are the ultimate engagement channel to bring government and industry together. 68% of government personnel report that they attend more than one event each year. FBC has worked with government and industry for 45 plus years to create gatherings where ideas are shared and to help government achieve its goals. This includes agency industry days, cybersecurity symposiums, tech expos, and offsite meetings. FBC provides full lifecycle meeting planning and event management. With over 5,000 meetings under their belt, FBC has the experience, systems, and personnel to make your next event exceptional. Learn more at fbcinc.com. They also have their big procurement conference coming up, and we'll have a slide available with more information on that soon. Last but not least, GovBrew. Please check out our friends at GovBrew. GovBrew is the most read government contracting newsletter, keeping thousands of government contracting professionals in the loop with news, updates, and opportunities in the federal contracting market, all in a fun and accessible email that only takes 5 minutes to read. It's 100% free to join. It goes out every Monday, Wednesday, and Friday at 7 a.m. It's filled with great content, event postings, webinars, and more. We encourage you to sign up at govbrew.co, or you can use the QR code you see on the screen. Okay, and the reason that we're here today is actually to cover the FAR Part 29, which is the topic on taxes. We are joined by Meredith Polaro from BDO. And Meredith, I'm going to put myself on mute, turn the floor over to you, and thanks again for joining us today.
Hello, everyone. Thank you, Jennifer, so much for the introduction and the opportunity to speak with everyone about FAR Part 29. It is a pleasure to be with you today. My name is Meredith Polaro, and I'm a tax principal with BDO, which is an ESOP-owned public accounting firm. Our Center for Excellence for Government Contracting, headquartered in our McLean, Virginia office, supports and collaborates with BDO offices around the country and around the globe to develop innovative and practical tax, accounting, consulting, and operational solutions for the government contractors we serve. The center also serves as a valuable resource that studies and disseminates information pertaining to the industry, publishes weekly and monthly thought leadership, and holds seminars and events on the latest developments in the industry. Next slide, please. FAR Part 29 is quite simply called taxes. It outlines the policies and procedures for contracting officers to apply regarding federal, state, and local taxes when acquiring supplies and/or services for the government. Although it is designed to provide guidance to contracting officers, it is still good for government contractors to be familiar with these guidelines so they understand why certain clauses may be included in contracts they are awarded, or possibly even would want to work with the contracting officer to insert if they are missing. Next slide, please. This is the breakdown of Part 29. It's a relatively short section of the FAR compared to other sections. We'll be looking in detail today at subparts 29.2 to 29.4 in our discussion. The general section is dedicated to resolving tax problems. Essentially, it notes that when tax questions arise, contracting officers should request assistance from the agency-designated legal counsel, and that they should consult the agency-designated counsel before negotiating with any taxing authority themselves. Contract tax issues are legal in nature, and just as the government has legal counsel to assist with contract matters when they arise, contractors should also be sure to work with the appropriate advisor when there are questions related to contracts and tax matters that may be involved. Next slide, please. Beginning with subpart 29.2. Federal excise taxes are taxes imposed by the federal government on specific goods, services, and activities. There are two main types of federal excise taxes. One is based on the value of the product, typically as a percentage of the price. The other is specific and based on a physical quantity or specific feature, such as tax on a gallon of gasoline. Listed on the slide is directly from FAR Part 29, what is listed as examples of common excise taxes. 29.201B calls out that the government is sometimes exempt from excise taxes. It is important to note that government contractors may not be. Although their customer is ultimately the government, they are not the government themselves. So you'll see in this section is noted that contracting officers should solicit prices on a tax-exclusive basis when the government is exempt. When that is the case, contractors should review whether or not an exemption certificate or similar may be needed to support the treatment of that item as not taxable. Next slide, please. Moving on to 29.3, state and local taxes. The FAR makes note that in general, purchases and leases made by the federal government are immune from state and local taxation. For any specific purchase or lease, however, the contracting officer is to reach out to the agency-designated counsel for legal advice. The contracting officer is directed to take advantage of all exemptions that may be available. Take a look here at 29.303B. When purchases are not made by the government itself, but by a prime contractor or by a subcontractor under a prime contract, the right to an exemption of the transaction from a sales or use tax may not rest on the government's immunity from direct taxation by states and localities. It may rest instead on provisions of the particular state or local law involved, or in some cases, the transaction may not in fact be expressly exempt from the tax. The government's interests shall be protected. As called out in this section, a particular state or local taxing authority may have provisions related to sales to the government. For example, Virginia Code Section 58.1-609.1 relates to governmental and commodities exemptions from sales and use taxes. In addition to other exemptions, it specifically notes that tangible property for use or consumption by the Commonwealth, any political subdivision of the Commonwealth, or the United States are not subject to the state's sales and use taxes. How does this work in practice? If the government itself is buying tangible property typically subject to sales tax, the contracting officer would provide an exemption certificate. If a government contractor is buying the property and reselling it to the government, then the contractor would need to provide a resale certificate to the vendor. However, if the government contractor is acquiring tangible property that it will consume in the performance of services for the government, then the contractor may well be subject to sales tax. DC has a similar exemption in its code. Next slide, please. You'll see here, frequently, property owned by the government is in the possession of a contractor or subcontractor. Situations may arise in which states or localities assert the right to tax government property directly or to tax the contractors or subcontractors' possession of, interest in, or use of that property. So for example, a contractor may have a government-issued computer and potentially a state is trying to tax that computer while it's in the hands of the contractor. If that liability is asserted against the contractor directly, the contractor should work with their legal counsel and the contracting officer to help resolve. Next slide, please. Let's walk through these special consideration items. Looking at B, for example, The applicability of state and local taxes to purchases by the federal government may depend on the place and terms of delivery. When the contract price will be substantial, alternative places and terms of delivery should be considered in light of possible tax consequences. Here, the onus of the responsibility appears to be on the government, but the contractor will want to pay special attention to these rules as well. If the contract notes that sales taxes cannot be included in the price, for example, and then it's requested that delivery is made to a jurisdiction that would not be exempt, this would be easiest to resolve on the front end by either giving the contracting officer an opportunity to reevaluate the place and terms of delivery or to incorporate taxes at that point as an adjustment. You may know Part D, calling out North Carolina. That's because there's a very specific rule in North Carolina that may apply. The North Carolina Sales and Use Tax Act authorizes counties and incorporated cities and towns to obtain a refund from the state for sales and use taxes indirectly paid on building materials, supplies, fixtures, and equipment that become part of or are annexed to any building or structure erected, altered, or repaired for such localities. To rephrase, local jurisdictions in North Carolina can receive a refund on sales and use taxes collected related to certain construction activities in their area. There was a case in 1965 where it was decided that the United States is entitled to the benefit of that refund. In order to claim that refund, the government must follow the procedure of the act to recover the refund. So when a particular contract calls for construction to be performed in North Carolina, the contracting officer would include clause 52.229-2. This clause requires that the contractor submit a certified statement to contracting officers by November 30th of each year that discloses North Carolina state and local sales use taxes paid in the prior year. The contracting officer would then use that information to claim the annual refund. So it's important, that's why we talked about going through what some of these clauses are so that you can take note of some of these special items that you may be subject to as a result of this particular contract and this very specific act and negotiation that's taken place with the state of North Carolina. Next slide, please. This section relates to exemptions. So you'll see here, if a reasonable basis to sustain a claimed exemption exists, the seller will be furnished evidence of exemption. Evidence needed to establish exemption depends on a variety of factors and may include a copy of the contract or relevant portion of the contract, copies of purchase orders, shipping documents, etc., that identify the United States as the buyer, a state or local form indicating that the supplies or services are for the exclusive use of the United States, or any other state or locally required document for establishing a general or specific exemption. Contractors would want to retain support for exemptions in their files. This can be helpful in the event of an audit by the state or local tax jurisdiction, and also potentially in due diligence as part of a transaction. Next slide, please. Moving on to subpart 29.401 on domestic contract clauses. You'll see here, except as provided in paragraph B, the contractor will insert the clause at 52.229-3 if the contract is to be performed wholly or partly in the United States or its outlying areas, a fixed price contract is contemplated, and the contract is expected to exceed the simplified acquisition threshold. Exception B says, in a non-competitive contract that meets all the conditions of paragraph A right above, the contracting officer may insert the clause at 52.229-4 instead of 229-3 if the price would otherwise include an inappropriate contingency for potential post-award changes in state or local taxes. The primary difference between these two clauses is that -3 references federal excise taxes and duties, whereas -4 also includes state and local taxes. Paragraph C in both clauses states that the contract price shall be increased by the amount of any after-imposed tax or of any tax or duty specifically excluded from the contract price that the contractor is required to pay, including interest or penalty, if the contractor states in writing that the contract price does not include any contingency for such tax. And of course, that the liability for the tax was not incurred through the contractor's fault, negligence, or failure to follow the instructions of the contracting officer. Next slide, please. Here's another example of a particular jurisdiction having special rules, like North Carolina before. Under the circumstances described on this slide, the contracting officer should insert the clause at 52.229-10. And for your reference, if you go to acquisition.gov, you can review any clause. Looking at this clause, I want to draw your attention to some very significant points. Number one, so if this clause is in your contract, number one, the contractor is required to register with the State of New Mexico Taxation and Revenue Department within 30 days after award of the contract and identify the contract number. Two, the contractor will pay New Mexico gross receipts taxes as per state rules assessed against the contract fee and costs paid for performance of the contract within the state of New Mexico. Three, the allowability of these gross receipts taxes will be determined in accordance with the allowable cost and payment clause of the same contract. Four, the contractor will also submit applications for certain non-taxable transaction certificates, which would be provided to each vendor in New Mexico selling tangible personal property to the contractor for use in performance of the contract. In my experience, the existence of the New Mexico gross receipts tax comes as a surprise to many government contractors doing business in New Mexico. If you have this clause in your contract, please be sure to get professional advice as needed in order to follow the guidance. If you expect this clause should be included but is not, you may want to discuss this with the contracting officer before the award. Whether it is included or not, if you are doing business in New Mexico on government contracts, like with any other state, you'll want to be aware of the various taxes that can apply and be sure to understand the allowability of these costs. Taxes such as the New Mexico gross receipts tax, the Hawaii excise tax, or the Washington B&O tax are not part of annual income tax filings and therefore not typically handled by external tax preparers. If the contractor has not registered in these states, they may not be notified of the filing requirements or due dates by the state, causing late or missed filings. Each contractor should be aware of their activities in various states and work with professional advisors to be sure they understand the potential tax implications of these activities. Next slide, please. Further on the New Mexico issue, when a contractor enters into a cost reimbursement contract where there is an expectation that tangible property will be acquired to use in performing services in New Mexico with any of these agencies listed here, such as the Department of Army, Air Force, Navy, Department of Labor, Department of Energy, NASA, GSA, you would expect to see this clause in the contract. Next slide, please. 29.402 outlines the specific clauses to be included in each of these circumstances. It's very straightly laid out here. They follow a similar logic of the domestic contracts where the clauses specify how foreign taxes and changes post-award may be accounted for in the contract price. And next slide. Thank you for the opportunity to speak today on FAR Part 29. As mentioned in the beginning, it is a rather short section. So hopefully this was helpful and informative to you today. I will turn it over now to Jennifer.
Meredith, thank you so much for presenting on FAR Part 29 taxes. Great presentation, and thanks to everybody who took time out of their day to join us. As we mentioned, all of our webinars are complimentary and recorded. You can find our recordings on our YouTube channel. Here's the link. It doesn't cost anything. There's almost 700 videos there on government contracting, everything from the FAR to strategic and tactical aspects of federal contracting. You'll find today's presentation over on slideshare.net, and you can log in to SlideShare with your LinkedIn credentials. Thanks again, Meredith. And thanks again, everybody who joined us today. We'll see you on Friday for FAR Part 30. Thank you.